Presenting today, Royce, a veteran member of CryptoFridays. Give it up for Royce! Let's fucking go! And he will be giving a presentation today, so everyone please direct your attention up here.
Okay. All right. Hello, everyone. My name is Royce. Yeah, good to see a lot of familiar faces, so I feel like a little bit better about doing a public presentation. Today, I'm going to be talking about the base case for Bitcoin. I've talked to a lot of people, and we get kind of varying levels of understanding of blockchain, anything from newbies to people, I guess, people are running DAOs apparently in this room. So varying levels of experience. But yeah, a lot of times it's really easy to get caught up in kind of the craziness of like the craziest news. And for me, I have a professional history in finance. I transitioned into technology. And today I work as a technical product manager at a startup. But since joining crypto, my learning velocity on blockchain has like gone through the roof. And so I have nothing to sell today. I'm just kind of trying to share some of the things that I've learned, which the base case for Bitcoin give me the principles to keep me curious with high conviction to actually learn more on my own journey. And so hopefully I can kind of just share some of the fundamentals with you and while you go on your own journey, right? So the first thing is kind of Bitcoin money, the whole concept. I'm sure a lot of us, if we were alive back then, American dollars used to be mapped for gold. So you could literally go to the bank, like exchange dollars and get gold back. Crazy stuff happens, a little thing called the Great Depression. But as the world was kind of like reforming itself, right? World War II happened. In 1944, there was something called the Bretton Woods system that was implemented. And what it effectively did was the whole world's financial systems were kind of messed up. So the American economy came out on top and then said, hey, we're going to peg our money back to the gold, and we're going to start distributing and doing world trade in dollars. At this point, we start becoming what's known as the world reserve currency. This goes great. This is totally fine till you hit 1971 when inflation starts kicking off. President Nixon is in office, and people are literally walking in with dollar bills, getting gold out, and they go, oh, crap, like the equation's messed up. We need to stop this, otherwise our reserves are going to go bust. And it is at this moment that the world's biggest experiment in like world economics begins, because we leave a world dollar backed by gold, and we enter into a world dollar that is backed by the United States government. And this kicks off a whole chain of events, which we'll kind of talk about really briefly. My intention is to keep this kind of like surfacey and like just kind of move quick. So ever since then, we basically had the ability to print money on demand whenever we wanted. For the first 20 years, nothing crazy happens until we run into the 1990s, and you start seeing the chart kind of go up. This is a chart from the Federal Reserve measuring the monetary supply, so literally just the amount of dollars that are out in circulation. We run into the tech boom, which leads to the tech bust, the dot-com bubble, and two things happen, right? The United States government goes, oh, crap. The Federal Reserve goes, oh, we need to lower interest rates, put more money out there so people spend so we don't go into like a crazy economic crash. And then the government starts spending money. And at this time, we also enter the war on terror, right? So a lot of money is just getting created. And you see, we're going to go through a lot of history here, but the idea is just watch how this chart changes over time with every kind of like crisis that happens, right? This goes well, housing market goes crazy and bonkers, right? Everybody kind of remembers that. And we all know how that ends, which ends in the 2008 crash. The Big Short, exactly, right? And so the gray is another like recession that we go into, but when that crash happens, we're like, oh crap, we gotta save the economy. So we do two things. We lower interest rates again, put more money into the system so people spend, and then the government starts spending a bunch of money themselves, i.e. the bank bailouts. So money is just getting cranked out, like a lot. Then we all remember what happened like 2 years ago when a little bat got cooked in soup in Wuhan, right? The whole world just kind of stops. And they're like, oh crap, the economy's falling apart again. What do? We do two things. One, more money, right? And look how that chart changes. And that's where we are today. And again, this comes back to some of the founding principles of why I stay passionate about kind of pursuing the knowledge and learning that I do today within blockchain. It doesn't take a genius to look at that chart and go, like, there's been a big change, right? And the only reason why this was able to happen is because it goes back to the two things I talked about earlier, right? The move into fiat currency when we broke away from the gold standard, and when we became kind of like the world's reserve currency. And so you look at that chart, you're like, how the heck are we even allowed to do that? Like, that's crazy. Well, it's because they don't really have a choice, right? If this is a chart from the Federal Reserve. Every chart that I show is publicly available. I can send you links if you're interested. But this is a chart showing the percentage of exporting invoicing, right? Like global trade, how much of it is denominated in dollars. And you can see, it's not even a comparison. Like American dollar is just everywhere. Go into the next one. To go even a step beyond that, not only are we all trading in dollars and the world economy is based on dollars, but you look at, so the foreign exchange reserves themselves are denominated in dollars. So literally a country will go, okay, how do we stabilize our currency, our paper currency? And they go, oh, well, the most stable thing we know is dollars, so we'll just own a bunch of that. And so as you saw that that monetary supply chain chart go up, we're not just diluting the American economy. The reason why we're able to get away with it for so long is because we're diluting the world economy, right? And everyone's stuck. It's like vendor lock. It's like when you move into a new apartment, you're like, what are my internet choices? You're like, oh, I got Spectrum, shit, right? No one's happy about it, but it's what you got. And I think that paints the picture of where we are today, right? And if you look at the competition, what are the other things that countries can rely on as a world reserve currency? And you start looking, you're like, okay, the euro, the British pound, Japanese yen, Chinese renminbi. You're like, do we really want to switch the dollar for any one of those, right? The answer is obviously no, and you can tell the world has behaved accordingly. And so at this point, we've covered 50 years of monetary policy and the things that have led us to where we are today. And we're all sitting here at a blockchain event, at a crypto event, so everybody already gets the joke, right? And so that's where we introduce a potential new alternative, which is Bitcoin. Woo! There's a lot of information about Bitcoin, but for the purposes of today, two things I want to focus on, which is one, there's a fixed amount of Bitcoin that gets circulated, right? And two, it's decentralized. Literally anybody with a strong enough computer can just plug into the network and earn Bitcoin and benefit from it. The key here being decentralized, meaning no government can go, oh crap, we really screwed up with those mortgages. Let's print more Bitcoin. That can't happen, right? And the beauty about it is all of the progress that Bitcoin has made today is completely voluntary, right? It is probably, in my opinion, the most democratic thing out there because no government, no leader controls this. It's literally a protocol that appears to be very fair, and people are volunteering into it, and at pretty large rate and numbers. And so, okay, great, I get it. This is a potential alternative. By the way, I need to also put into consideration, at its height, Bitcoin market cap, so the total value of all the Bitcoin that existed in the world was $1 trillion. That is literally a drop in the bucket. The United States GDP alone is 26, right? So it's not a real contender for world reserve currency status. And we need to understand that. It's not oh, this is a sure shot. We are very early on. And that was at its peak. It's super volatile. It dropped, right? So it's $500 or $600 million right now, market cap, right? So this is not a real competitor yet. It's just a hope on this idea of decentralized fixed Bitcoin circulating in the world. And so you're like, great. This is something that I'm interested in, right? So you start talking to your cousin about it, your mom, your grandpa, grandma, and you're like, oh, God forbid. And the first thing they go, well, shit, it's super volatile, right? How do I even, every time I talk to people older than me about it, they're they kind of shy away, right? It's it just seems like a super risky thing. And if you look at that chart, it's yeah, look at that craziness. You definitely don't want to put rent money in here, right? Because if you got to pull stuff out in 3 months, it can literally drop in half. And right now we are currently at a pretty substantial low right now, right? And so this is scary until we take a new perspective on it. So the new perspective being humans think in a linear kind of pattern. So 3 years ago, I was doing that. In 3 years, based upon that progress, I will probably go in this way, right? So we think in a linear pattern. Think about technology and how it changes things is things now move at a compounding or exponential kind of pattern. So instead of looking at it like this, you have to look at it like that, right? It's a very simplistic thing. So if you take that concept and put it to the blockchain, like to Bitcoin price points, instead of like a linear kind of frame, you go 1 to 10 to 100 to 1,000 to 10,000, right? If you move at a logarithmic, an exponential kind of pattern, it actually follows a pattern. Like there is some predictability here with a lot of variation, but there is a direction that it's going. And like when I saw this, I was like what? That's crazy. And then you take that concept of, okay, if we think in an exponential kind of pattern, right? And we normalize our numbers to it, what else can we kind of find out of it? Well, we all know that people put their servers onto Bitcoin so they can mine Bitcoin, right? So there's a certain amount of production or supply or stock of Bitcoin. So I'm going to go ahead and introduce the stock to flow model. So every 4 years, Bitcoin goes through a halving cycle. So that means the amount of Bitcoin that's generated for miners drops in half. And this way, you'll never hit zero. You'll never run out of Bitcoin because you'll just kind of get close to zero and then kind of like skate with it till whenever. And if you take that logarithmic, the 1, 10, 100, 1,000, right? If you take that exponential curve, you actually notice it models directly to the stock to flow model. And holy crap, I was like, whoa, there's patterns that are emerging here. It's actually a little bit predictable compared to the crazy chart that we saw earlier, right? But it takes a perspective change on it. Talked a lot. Pretty cool stuff when I realized what was going on here. Again, should you put your rent money or the money that you owe your grandma here? Definitely not. But for money that you don't want to see for a long time, this is something that could be interesting, right? I'm not an advisor. There's not investment advice. But again, we're going back to principles, right? Principles that keep me motivated and feed my curiosity, continue learning about blockchain, Bitcoin, and all of that. But the last slide I'm going to show you guys is probably the most encouraging one for me, which is the adoption curve. So it's kind of hard, I'm sure, from people in the back, right? This green line here is Bitcoin adoption. This straight line here is PayPal accounts. This one over here is internet adoption. And so the key kind of base case here being the internet has probably been one of the most profound technologies that's impacted all of our lives and for all the generations to come. And the more people that got onto the internet, the more disruptive and more powerful it became. And so if you look at the rate, so if you take that case, a new technology that gets adopted rapidly, and the more people that get onto it and build on it, the more powerful it becomes, Bitcoin adoption, and therefore blockchain, is moving at a faster rate than even the internet, which then plants the seed to go, if the internet made that kind of impact on the world, what can Bitcoin and blockchain potentially do? And that's what fuels my kind of passion and excitement, and the reason why I'm learning Web3 development, right? And so if we kind of wrap up everything today, we went through a lot. The first being understanding the history, right? The moment we detached from gold, we started kind of the fiat currency thing, which allowed us to print a lot of money, which we did, and we are currently doing at a very aggressive rate. We looked at kind of some of the alternatives, and we went, well, jumping to any centralized government doesn't seem like such a great option or alternative. Therefore, the base case for Bitcoin. We also talked about how, although it is volatile, there is actually an exponential growth pattern emerging here. And you can also throw the stock to flow model on top of it, and the adoption curve. It's a technology that's being adopted faster than any other technology in the world. The more people that get onto it, contribute to it, the more powerful it becomes. And so with that, that concludes my kind of presentation on the base case for Bitcoin and blockchain. Thanks for listening, and Wagami, we're all going to make it.